In this video lesson, I will explain to you what is the difference between buy and sell order in the Forex. On the left side, I have an article I have written on the getnotrading.com website. The link will be below in the description, so you can read it later on if you would like. But here it is, few images I would like to explain a little bit first before I move on the right side where the chart is currently, where I will show you what is also the difference between the buy and sell order directly on the trading platform. So I will stretch a little bit this like this so we can see a little bit better this image I have currently here. Now, what do I have here? First of all, the buy and the seller are two types of orders, and the logic is the only two things that you have in trading. You can define, will the price go up from the current market price, and that means if the price will go up, or the price will go down. If you define in which direction the price will go, you will make money. But if the price goes against you, which means if you predict the price will go up, but the price instead goes down, this means you will lose money. So this means if you would like to open an order, that means if you predict if the price goes up, this means you will open a buy order. If you define that the price will go down from the current market price, that means you will open a sell order. So you have a buy order and a sell order. Buy order is when you expect that the price will go up, and the sell order is when you expect that the price will go down. Now in this example, on this image, you can see that here, if you enter here with buy, you would make money. And why is that? If you can see, this is the area where the current price is, and when the price is rising, you can see that the current market price would be 1.13635. And from here, if you enter into the trade here, you expect that the price will go up, and that means the price is rising. So when the price reaches, for example, 1.14429, this means you can exit from that trade. And if you exit from that trade, you would earn 79.4 pips. So when you make calculation with the lot size and the volume, then you would see how much money you would make. The lot size and the volume just define how much each this pip is worth. So for example, if 1 pip is equal to $1, that means that you would make $79.4 on this trade if you enter here and you exit here. But this is the way, this is the buy order. That means you are expecting that the price will rise in value from the current market price, and that means when you enter into the trade with the buy order. Now there is second example when the price doesn't rise, and this is something that is called the price is moving sideways, and that means the price doesn't go up or the price doesn't go down. So the range area where the price is does not change a lot. You're not making money with sell or buy because the price is not rising nor declining. And that means if you enter into the trade, for example here at this candle, and you for example open a buy order, you're expecting that the price will rise in value. But you can see that the price goes a little bit up, then goes down, then goes up, then goes down, then goes up, then goes down. It doesn't move too much, too far from the open price. And that means the price is moving sideways where you're not making any money, but you are also not losing the money. So if you open a buy order, you are expecting that the price will rise in value. Just like in this example where the price has moved outside of this area from this sideways moving, and then eventually the price has gone up, 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 and if you open a buy order, you make money here. The third case is the sell order. The sell order is when the price is declining. So for example, in this image, you can see much more details where you can see if you enter here with the sell order, you would make money, and that is because if the market price is 1.13650, that would be around this one here, the price is declining and goes right here to the market price, which would be 1.12800. So the price has gone down, which means the price was moving and declining in value. If you open a sell order where you're predicting that the price will move down, you make money. So in this case, the price difference between the open price 1.13650 minus 1.12800 and this one is the exit price, you change have been 85 pips. So if 1 pip is equal to $1, this means you would make $85 on this trade. So this is the sell order. From the market price where you enter the trade, the price needs to go down. Now let's return here to the trading platform where I will show you a little bit more details about this one. So in this example, I will open first sell order. So you can see the price should decline and you should make money if the price goes down. But if the price goes against you, that means moves up, this will make losing your money. Here inside the trading platform, how to open your order is this one. Click this button and the new window will appear. Here you can select two choices which are only available. Will you sell by market or will you buy by market? Sell by market means at the current market price, which is currently here, you expect that the price will go down. So if the price goes down, you will make money. But if the price goes against you, you will lose money. If you are ready, simply click sell by market and then the new order will open. Before I do that, I will just change this one to 0.01, which will be the small slot size. In this video, I will not go through the details, what is the lot size, what is the volume, but this is the volume that defines how much each pip will be equal to. So sell by market and the new order has been opened. You can see that we have here a dotted line which says sell 0.01, which is 0.01. It is a lot size and that is the volume here. Now you can see that the market price is 2371.95. So now I am expecting that the price will go down. If the price goes down, I will make money. And you can see the profit right here. Currently I am in minus because the market is a little bit above the open price I have currently here. So if the price goes up, I will lose money, but if the price goes down, I will make money. Now at the same time, I will open a buy order, which means I am expecting that the price will go up. So I will click the buy order and the new order will be visible here, but you can see also on the chart directly here. You can see it says buy 0.01. It is it's very close to the same price as the sell, so we have two lines very close to each other. But you can see here what happens. What is the difference between the buy and the sell order? The difference is that when the price goes up, and you can see that the price is moving up, the column here shows me that the buy order, where I have expected that the price will go up, this makes me money. But at the same time, the sell order, where I have expected that the price will go down, you can see that here, it is losing my money. So totally, I am currently in minus by 0.60, around that number is the current profit. I am in minus. If I go to the smallest time frame, let me see on the 1 minute time frame how this looks. You can see here much more clearly. We have a buy order and we have a sell order here. So the price has gone a little bit up, now it's moving down. Now you can see how the price changed. Currently, the sell order, where I have expected that the price will go down, makes me money, but the second one, where I expected that the price will move up, it's losing my money. So which one will you open? It is dependent on your decision. Will the price go up or will the price goes down at the price where you open the order? How to define where to go, where the price will move? Will it move up or will it move down? Let me change to the 1 hour time frame. This way I will show you a little bit more details to explain what is one of the simplest strategies that you can use. For example, currently we can see this is the dotted line which represents a support level. That means when the price goes down, it is expected that the price will stall here because there are buyers that are expecting to push the price up. Here on this one, on the dotted line right here, this is currently our resistance because it is above the current market price. So when the price goes up, we are expecting that the price will stall here because it has a resistance that is preventing the price from moving up. So if you would like to open the trade at the current moment where the price is in between the resistance and the support, I would much more be inclined to open a buy order because the price has gone above this area where we have support and it is heading to reach the resistance, and from there the price could stop or reverse back down. So I would be much more inclined to see the price moving up to this one where the resistance is, and then I would get out. So when the price goes again above this area, which is a resistance, then this area would become a support. So I would also open the buy order where I would expect that the price will continue to rise in value. If the price goes down, which means if the price returns back down, go below the support level, that means here I would open a sell order waiting for the price to reach this the next support, which is right here, and then I would exit from the trade. So this is one of the called breakout strategies where we expect that the price will move in one of the directions, and if the bullish breakout is on the market, that means bulls who are pushing the price up would go above, making a breakout of this resistance and continue to rise in value. A bearish breakout is the case when the price goes below the support, the price manages to go below this support where the buys are waiting. That means the price has found enough strength to move even more down. So I would start selling the pair, which means I'm expecting the price will go down. So this would be a bearish breakout with a target on the next support. So this is the difference between the buy and sell order, and what would be the option to open the buy and the sell on the breakouts strategy with the support and the resistance lines. So this is all about this about the buy and sell order, what is the difference between them, and what is the logic in trading. So remember, there are two only options you can define. Will the price go up with the buy order? Will the price go down with the sell order? If the price moving sideways, you will not make money until the price makes a breakout to the upper side or to the downside. If you have any questions regarding this lesson, feel free to leave a comment, and see you next time. Happy trading!